Thank you for staying. I'm going to start with a little bit of personal sharing before getting into the meat of my presentation, in that for the past 3 years I've been stuck in a room. My wife is Polish, and we moved to Poland in 2020. And since then, we've been living just outside Warsaw. And I don't speak Polish. I do speak Dutch, which is why I've got this tie. But I tried to learn Polish during the lockdown and failed miserably because the most common letter in the Polish alphabet is Z, or if you're an American, Z. And on Scrabble, that is the rarest word that's worth 10 points because we don't use it in English. So I spent the whole time in lockdown, locked in my room, in my office, not wanting to go out because I don't speak Polish, and not knowing what to do apart from Zoom, which I did plenty of, and playing Minecraft with my kids, stuff like that. But I realized, as I stand here today, that something's happened, which is that I've changed. I'm fat, hairy, and blind. In that I grew this just because I thought it made me more Doctor Strange. Or someone said to me, "Drop the doctor, you're just strange, Chris." It's more mysterious. And I'm wearing the glasses, which I don't actually need, although I'm completely blind in my left eye. So I'm going to take these off, but I can still see you, so be careful. And my weight's changed because I've had to stop jogging, running, because I've got bad knees, I'm getting older. And I've realized that I've become a blend mix of Jim Maroose and Brett King.
Sorry.
I had to get that joke in there somewhere. So during the lockdown, we had the pandemic for 2 years, followed by the Ukraine war. And being in Poland, we have lots of Ukrainians in Poland. My housekeeper is Ukrainian. And I've watched the situation very carefully. And yesterday I was invited to meet Joe Biden in Warsaw, but I'm here. I said no. A slight catch to that story is actually my kids who are invited to meet Joe Biden with me attending, and my kids are skiing in Italy, so whatever. But our world has changed dramatically in the last few years. I mean, it's a completely different world. I don't understand this world we live in today. I was so enthusiastic about globalization, integration, harmonization, standardization, everyone coming together, like the John Lennon song Imagine. Imagine where the world can live as one. I thought that's where we were going. And what's happened? You know, we're now divided, we're separating, it's all weird. And for me, that's a weird thing because I'm quite old, as you can tell from my hair and wrinkles and liver. If you saw my liver, you'd be disgusted. But I've got 2 kids, and they think I'm Iron Man. They think I'm amazing. They think I'm a superhero. I keep telling them, no, Iron Man is actually Elon Musk. You know, that's the guy, and I'm Bruce Banner, so come on. You know, don't look at me like the superhero. But here are my 2 boys. They're 6 years old, twins, Eddie and Freddie. I tried to get my wife to call them Reggie and Ronnie, but she sussed me out. Don't go there. But I've spent the last 3 years pretty much locked in the house at my desk with them around me all day, every day. And it inspired me in such a way that I become a children's author. I've written 5 children's books about Captain Cake and the Candy Crew. There's Sergeant Jelly, Lieutenant Chocolate, and Private Potato. Private Potato is the real one. She's very special. But I won't try and sell you those books. I'll try and sell you some other books about banking and fintech. Because I've produced 17 books about banking and fintech over the past 20 years. And the big thing for me during the lockdown and the pandemic and the war and all the things that have gone on in the past few years is I'm questioning everything. It's made me think different. It's made me wonder about the world we live in and the people in the room and how we interact and deal with each other. Did you find that? Do you question things? Because if you don't question things, then you shouldn't be in your job. All of us should question everything. So, for example, the world we believe we live in has hard borders between territories that are called countries that don't exist. We're in the Netherlands, or some would call it Holland, or some would call it a place in Europe, or some would call it somewhere in the world. It doesn't exist. We made it up. Poland, we made it up. Britain, we made it up and then we divorced from the rest of the world. Doesn't exist. There's no borders. And the internet makes us question the borders because, particularly when you look at cryptocurrencies, for example, the cryptocurrency world doesn't understand any segregated world. It just understands a networked world. How do you enforce laws that are domestic in a world that's open? Open banking, open standards, open payments. Where are the borders? They don't exist. In the network world, we could also question time. Albert Einstein questioned time, because time does not exist. We made it up. What time is it now? Whatever time you think it is, it's the time that was made up for this part of Europe. It doesn't exist. We just made it up. Time is actually very important when you get into investment banking and trading. I've recently been dealing with some companies that do transparency time as a service, which is fascinating because they can, using atomic clocks, date stamp and time stamp every trade to within a microsecond. Whatever. You know, it's a bit like companies and countries. We made them up. They don't exist. Your company doesn't exist. You made it up. It exists in law and in contracts, as does time and as do borders. But we made them up, which is why I question everything. Money doesn't exist. The Bank of England recently took the £20 note out of circulation and replaced it with a new plastic one. Well, does the old one still count as a £20 note? Only as long as they say it does. Does the euro exist? What happens when you get a digital euro? Does the physical euro become rubbish? Do we take it out of circulation? And what's a digital euro anyway? I mean, why would we recognize a digital euro or digital dollar or digital yuan? They don't exist. We just make them up. But they're made up because governments tell us that they are real. But the world that the governments grew up in no longer exists. Because most of the people who grew up and are now in government grew up in a world that had borders, timestamps, and segregations, and didn't have the internet. The world we live in today does not exist in the world that our leaders existed in. Our world today questions everything. Most of the startups that I deal with think different. Most of the visionaries that I deal with accept that they can change the world, that the world that we grew up in, particularly people of my age, no longer exists. Most of the people I deal with who are visionaries that were in their teens and now in their 20s and 30s are changing our world to be something completely different. And I think there's two factors there. One is the fintech world, and the other is the traditional financial world. And if I use the word incumbent today, I apologize, because I don't like the word incumbent. It sounds derogatory. It sounds like a swear word. Oh, you're an incumbent. I prefer traditional finance, which was analog. And now we're building a digital world with digital transformation to be connected globally, where borders do exist and governments do have authorities, but their authority and their borders are weakening every single day. Let's start with the fintech world, which I think of as this marriage between the parent and the child. Parent being the financial world, which is stable, secure, resilient, reliable, and the child that's kicking the walls and screaming and shouting and painting across the room and telling mum and dad that you're idiots. And I know this from personal experience, even at 6 years old. But they do get disciplined and locked in the pit when they behave that way. And the pit is very deep. It's not a real pit. It's like a room in the house with a lock. When I meet most bank boards, I meet people who look like this. You know, they're people like me. They're people who have been around the circuit. They know how finance works, resilient, reliable, stable, secure. And then I go into a fintech and I meet their board, and their people are very different. They're younger, they're more visionary, they're more excited, they're more enthusiastic. And right now they're far more challenged because in the last year, fintech's been going through a bloodbath. You know, most of these startup companies have never been through a recession. And they're going through one right now, and their funding runway is drying up, and they're sending out their souls to get money or to get bought. Having said that, that's a few of them. It's not all of them. There are some that are standing up big and proud, and they have good funding, and they're buying up the weak. The strong take out the weak. It's a bit like the dot-com boom and bust. You know, there was a headline front page of Time magazine in 2002 asking when Amazon would go bankrupt. Didn't, did it? Not yet. In fact, it's quite funny because I talked about a K-curved economy during the pandemic because I could see digital was on wildfire. Everything was going digital. And the K for me, the upside of the K was digital, and the downside of the K was physical. And I thought that that would persist post-pandemic. It hasn't. You know, I thought retail digitally would stay strong. It hasn't. People are going back to shopping. So not everything changes. Having said that, the world has changed a bit. You know, Amazon's share price is down. I didn't look recently, but it was about 30% in the last year or thereabouts, because people are going back to physical shopping. Having said that, that's still not a bad share price, guys, compared to 20 years ago. So when I look at the young visionaries, I'm still hugely excited about the potential to change finance, because I think finance is broken. You know, when I deal with traditional financial institutions, they don't work the way I want to work. They don't alert me correctly. They don't proactively deal with me correctly. They don't offer the services I want correctly. And yes, I do get that from some of the startups. In particular, for example, because I live in Poland, although I'm English, you may have spotted that by my voice, I use Wise all the time. And you may say, is Wise the best thing to use? Yeah, there are alternatives, but it's just easy. And that's what I want. I want easy. And I don't get that from my bank. If I try and do a transfer from London to Warsaw using traditional banks, I have to go through 100 clicks. With Wise, it's just one swipe. Easy. That's what I want. And that's the reason why thousands of startups have done so well in the last decade. You know, the 2010s were the decade of startup innovation in finance. And that's the reason why we saw so many dollars going into fintech. Admittedly, it went down last year. I think it's about 130 billion in fintech in 2022. Still not bad, is it? But it's down because last year was not a great year. But the ones that are stronger than ever. You know, there's companies like Revolut, who everyone talks about, or Starling, that are still doing incredibly well. In fact, Revolut's just about to acquire one of their partners. Equally, we've seen some of the banks like RBS and Chase acquiring fintech companies like Nutmeg and Cushion. The market is still strong, but some of the companies have weaker valuations and therefore are cheaper than they were a year ago. So we'll see a lot more of that acquisitionary trail. Fintechs buying fintechs, banks buying fintechs, fintechs maybe buying banks. There's already been a couple of those. Putting it in perspective, you know, the fintech industry as a whole grew from, in 2010, being about 3% of the financial markets to being 38% by value at the end of 2021. You can't ignore that. You can't dismiss that. This is a market that is changing the financial industry rapidly. And it's everything from cryptocurrencies through to lending, payments, mortgages, savings, everything. I quite often say that most of the fintechs I deal with, of which there are many, are changing processes code by code, step by step, process by process. They're attacking every little piece of finance and saying, can we package that into an API? Can we deliver that as an app? Can we get the data to do the analytics around this piece? And rather than trying to own the whole end-to-end of all finance and banking, doing just one thing brilliantly well. 26,000 startups or more doing one thing brilliantly well is far more impressive than one bank doing 26,000 things badly. Get it? I've interviewed a few people over the last year or two during the pandemic. This is one of my favorite interviews. This is Rich Council, who's a farmer. Well, he's not really a farmer. His dad's a farmer in Somerset, which is a south west Britain. And he didn't want to be on a farm. Instead, he joined a large investment bank in London after leaving university and became a banker. And whilst a banker, he thought, you know what? Don't really like banking either. And I've realized something, or Rich realized something, which is farmers are not very good at dealing with money because they don't understand it. They understand cows and sheep and horses and stuff, but when it comes to money, it's pretty difficult as a farmer, particularly, for example, growing crops and the risk of crop failure. And how do you hedge the risk of your crop failing? Now, you can do that quite easily with some things like oranges, and anyone who's seen Trading Places will know you can do hedge risks of certain crops. But you can't do that with avocados, for example. Or rather, you can now, thanks to Rich, because he went back to his dad's farm and in a barn started a fintech called Stable. And now it's a unicorn. Head office in New York. This is only 5-6 years. And it's all about hedging the risk of crop failures of over 200 crops for farmers worldwide, who all they have to do is open an app and go, swipe, and I've hedged the risk of my crop failure this year. Easy. I want easy. That's why Stripe succeeded. It's easy. I love Stripe. You want to know Stripe? You may not know when they started that Patrick and John Collison were 19 and 21 years old. That was in 2010. And they got into the Y Combinator in Silicon Valley and grew rapidly from there. So much so that after they launched Stripe in 2011, it was worth almost $10 billion 5 years later. Teenagers are redefining financial services. They're reimagining banking and finance. And this is just a simple thing to do a payments checkout online. But because it was easy, 7 lines of code as an API, everyone used it. In fact, it's so easy, and they've expanded services into B2B and merchants payments, that they've grown significantly since 2016 into a near $100 billion company in 2021. Putting that in perspective, that's like almost 10 Commerce banks. It's 4 Deutsche Banks. It's a couple of BBVAs, maybe 3. It's a couple of INGs. The world's changed, guys. It's different. Now, we may have Schadenfreude, excuse my German pronunciation, at the fact that the valuation has gone down. But the valuation of everything digital has gone down. In my K-curved economy, it went up rapidly and massively in the pandemic. It's gone down. But this is still a strong, stable, resilient company that will be and is amazing. And it's still worth 5 commas banks, 6 commas banks. So don't think that fintech, just because it's going through a tough time, is done and dusted. It's a bit like saying Amazon was going to go bust in 2002. Amazon didn't go bust. It's gone from strength to strength. These guys will go from strength to strength. The world's changed. But there is a bloodbath out there. And the problem with the bloodbath is that a lot of companies are going to go bankrupt because they don't have the cash runway. And that's the reason why you're seeing quite a few fintechs disappearing or being acquired. And so a lot of people talk about the crypto winter and where we are right now with the cryptocurrencies and say, oh, Bitcoin no longer is going to work, and also it uses too much heat and it's not environmentally friendly, blah, 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 blah. Well, look at Ethereum. Ethereum's moved from proof of work to proof of stake. And if you don't know the difference, Google it. Because basically, proof of stake means that you don't destroy the planet. Proof of work means that you might, because you're using too much energy. But I've heard Bitcoin is dead 1,000 times or more since 2009, and it's not dead, it's still here. If you think cryptocurrencies aren't going to eventually work as a global currency that ignores borders and governments and rules, then you're stupid. Because there's a lot of people out there who know how to make that work, and they are making it work. A lot of things haven't worked, like FTX with Sam Bankman-Fried. I like the idea of Bankman-Fried. It's actually Bankman-Fried in pronunciation, but a fried bank guy, yeah, he's been fried. Or Canada's exchange where the CEO died, and with him died the password to all of the cryptocurrency on the exchange. Or Mt. Gox, which I was on, and I lost a lot of money on Mt. Gox, as Ali knows. But I'm going to get it back. Yeah, it's gambling. Or it's the future. Looking at these names and thinking about what's happened, these are not cryptocurrencies. These are cryptocurrency trading systems. These are not the currencies. These are the people allowing you to play with these currencies. It's not died. And the core, and I've always said this, is that you need to have some governance. And the libertarians who believe wholeheartedly in cryptocurrencies always say to me, oh, you're a statist, Chris, or a statist, depending on how you want to pronounce it, because you're advocating that government has to manage currencies. And I say, no, I'm not. I'm just advocating you have to have some regulation of a currency. I don't care who that is. It can be the network of citizens globally on the internet. I don't care. But there has to be someone that I can turn to when I lose my money on Quadriga or FTX or Terra Luna or Mt. Gox and turn to them and say, can I get it back? And without that, it's not currency. It's just gambling. And there's the rub. You've got to have something to back it up. Right now, the biggest fintech trends are still around growth. There's going to be around $300 billion put into fintech this year, which is more than last year and the year before. A lot of it into AI and machine learning, according to Deloitte. Payments are still a big space, but, well, whatever. And I always find it interesting that some traditional grey-haired bankers like Bob Diamond, formerly CEO of Barclays Bank, is now saying digital currencies are inevitable. We just don't know which one it will be. I don't know which it will be. I know a lot of corporates who are actually putting treasury reserves into Bitcoin. I would not advise them to do that. I'd advise them to put it into Ethereum, just because Ethereum is far more corporate accepting than Bitcoin and much less corporate risk. So now I look at banks and digital transformations, and I know I'm going to do a panel after the next speaker with the chief digital officer at Rabobank. I don't like chief digital officers. I'm just warning. The reason I don't like them is that sounds like you've delegated the job of doing digital transformation to that guy or that girl. Oh, chief digital officer. Congratulations. Digital for me is all about what's up there. and the leadership and transformation of the culture of the organization to be digital at its core. When I wrote Digital Bank, which is now almost a decade old, the key message was, right now you have physical as the core of your bank, and you're adding all these things on top, like mobile, call centers, and digital on top of this physical core. You need to turn it upside down. You have to have digital at the core and allow employees and customers to access the digital core through whatever media or device that they're using. I still hold to that. And my last book was Digital for Good, which is around the idea of, can we use technology and financial services to make the world a better place? And I wholeheartedly believe we can. Through the last decade or more, I mean, the main thing that I've realized is the original front office was a branch, and the middle office was the infrastructure, and the back office was the head office, has dramatically changed into what I call the apps, APIs, and analytics world. So the front office is now whatever I deal with on my devices, which is through the Internet of Things. It doesn't mean my mobile phone or my tablet computer. It could be my fridge or my car or whatever I'm using on the network to pay for things, which is invisible and embedded. The middle office is the way in which the invisible and embedded connects me to all of my data through APIs, which could be provided through Stripe or through ING or whoever. I don't care. I don't need to see them. It just needs to be linked. And the back office is about, how much do you know about me? How well do you know my data? I get fed up talking to banks about artificial intelligence and machine learning when they have dumb data. They haven't consolidated or rationalized or integrated the data around me and as a customer. And so when I deal with them, they ask me my account number, my sort code, my name, my home address, and reference numbers. And I go, why should I have to tell you that? You should know, because I've rung you from my number, which ends 2270, and you know that's me. That's my mobile phone number. I deal with Santander. It's one of my banks. At Santander, my voice is my authentication. Why? You should just work out it's me as I'm talking. I don't have to say that, yet I'm forced to say it. I deal with Barclays, and Barclays, I've got to enter so many different entries before I get through to human. And then you get through to human, and they say, can you tell me your account number and sort code? And I go, I just entered it. You stupid idiots. Data is a differentiation. That back office is what the banks own today. They're going to lose it, because the middle and front office is being lost. That's where the battle's taking place. Oh, in case, did any of you notice, by the way, that my head office there is ING? It's the big clog. The only company I've met that really gets this is Alibaba. I wrote Digital Human about Ant Group and Alibaba. And when I met them, we talked quite a lot, and they presented this slide. This is like a 5-year-old slide. It's not new, but it so fits what I just said that I keep it in my presentation, because all the front office is the super app. It's the integration of commerce, service, entertainment through many, many players on their platform. Their platform is delivered through the Alibaba Cloud, which is their middle office, that connects to the back office, which is all about payments, obviously, because that's Ant Group. But my favorite bit of this slide is Alimama, the digital marketing and data operation. This is their data analytics piece. And they call it Alimama because Mama looks after Baba. You know? They get it. So when I talk digital transformation, and having been through the pandemic, I think it's quite clear, being stuck in a room for 3 years, that you can do everything digitally. And if you can do that, then you might as well think of your company as having a head office on Mars, and employees on the moon, and customers on Earth. Build that business model. That's the model you have to think about. You never see anybody face to face anymore. You will still have branches or operations that are physical when they're needed. but build the business model with digital at the core as though your head office was on Mars, your employees are on the moon, and your customers are on Earth, and you will definitely get digital transformation right. Unfortunately, most people do it in this way, which is what I call Bankenstein. It's dead. I mean, most of the banks I meet, their core systems and back office systems are dead. They're stitched together with sexy middleware into a front office app. But as a Bankenstein, it's only held together by injecting an awful lot of electricity into the head office to keep it alive. And none of it is integrated. It's an arm with stitches there and a bit down here and a bit down there. You know, it's a Bankenstein. You've got to refresh the whole thing, guys. So digital is at the core. And I interviewed a lot of banks around how they're doing digital. And it ended up with over 40 lessons that I learned from these big banks like JP Morgan Chase, ING, BBVA, DBS, China Merchants Bank. And at the end of it, I realized that they went through 4 phases of change. They began by working out what to do, then how to do it, and then they did it, and now they do it forever. And this is not a simple or quick thing, but most banks are going through this process. Working out what to do, they went and visited with all of the biggest technology companies around the world that they believe are digital leaders, like the Metas and the Amazons, but also the Tencents and the Badus. And they came away learning how they organize and manage their people and how they structure and how they do things. And then they internalized it to work out how could we do that internally. And then when they launched the internal change program, they launched with a burning platform, as in, if we don't change quickly, we're going to be eaten alive. We're going to be eaten by the big tech guys, we're going to be eaten by the fintech guys, we're going to be eaten by our competitors who are doing digital. DBS specifically said that when they had launched a digital bank in India and Indonesia, and so they presented the change program in Singapore and across Asia, and all of the managers were worried that they couldn't keep up with the success of their other management teams in India and Indonesia. That was the burning platform. But you can't just give a burning platform and say, you're going to die. You've got to say, instead of dying, this is where we're going. Give a vision. Give a place to go. A place that is the direction. And then do it. And most of the doing was actually this thing I said earlier about changing the heads of every single person in the company to understand digital at the core. So many banks I meet have launched digital offshoots. You know, let's start with a blank sheet of paper and launch a new digital bank called Funk. And then Funk starts funking up the whole company because it's not given any parameters, and the internal management of the old bank don't like funk, so they kill it. I don't believe in launching a new digital bank. It doesn't work because you're going to leave the old customers to wither on the vine and disappear, and you don't care about them. Change the bank. Don't launch a bank. And to change the bank, it's all about changing the people in the bank. What I love about the banks I interviewed is all of them focused on reskilling their people. So they took branch managers and made them social media interactors. They took people out of operations and made them Python coding experts. They did this through the innovation center that allowed anybody to take 2 hours off a day for 6 weeks to learn new skills and then move to a different part of the financial institution. And critically, they flattened the organization. ING said to me, we used to be 30,000 people in the Netherlands working at the bank. We're now 3,000 teams. Teams of 10 people who can dynamically, immediately change direction and pivot every single day if they need to. And if they need a decision from the CEO, they can get to the CEO that day and get that decision that day. I always remember Ali Group talking to me about some of the stuff they were doing in the Nordic region. And they said that they implemented a huge change program in 3 months, which was twice as quickly as they could get access to a senior vice president of a bank. Fast cycle change. Then do it better forever. What's the critical part of doing it better forever? Any guesses? Breathing. Data is the air that we breathe. You change things, continual improvement, absolutely. But if you don't have good data, you don't have good air. If you've got dirty data, you're artificially dumb. You need to breathe. Focus on the data. And that is the pivotal point for most customers and for most organizations, particularly banks, traditional financial institutions, as they have that data today. And that's what you have to leverage. Now, you can see from what I've just said that this 4-phase cycle is not quick. Maybe 5 to 7 years. And a lot of people are already on this journey and maybe are halfway down this journey. But I often use a quote from Charles Darwin, who didn't say it's only the fittest that survive. He said that it's not the fittest or the most knowledgeable or the strongest who survive. It's the ones that are most adaptable to change. And I've added onto that quote, changing into what? And so when we talk about digital transformation, you need to know, what are you changing into? And just as you think you've worked it out, everything changes again. Web 2.0. These guys definitely don't get it. These guys do. I often ask the bank board, can you define blockchain and the difference between blockchain and decentralized finance for me? Can you explain artificial intelligence and machine learning and the difference for me? And they all go, his job. Delegated to the CDO. Just wait till I get to the CDO bit. Here's my CDOs. Thank you. Welcome. When I look at the next generation of computing, I mean, we're all excited about Web 3 or Web 3.0, 5G, metaverse, quantum computing, you name it. It's all very exciting, but none of this really matters, to be honest, because it's not about the technology. It's about the culture and the thinking. I mean, when Meta can't even launch a service of virtual worlds with legs, then it doesn't have legs. And then we all get excited about all these other things. And in fact, the theme of my next book is all about centralized versus decentralized finance. And my tenet thesis in the book is you can have both, but both don't work. You have to have something in the middle, which is called governance. Going back to my point earlier, you can't have completely decentralized without some form of governance, which could be governance by the network of citizens. You can't have all centralized because the people who don't want to have central authority oversight won't accept it. You need something in the middle. I call it hi-fi, hybrid finance. And then I look at the macro picture, and this is where I'm coming to a close, because you're probably thinking, oh God, Chris is speaking this for so long, and I had lunch and I'm falling asleep. So the macro picture. And this is a picture I think goes down well, particularly in the Netherlands, but it goes down well with me because I've got my boys, and I want them to have a future. And I want technology and finance to do good for society and good for the planet. And this is a core message that I would finish with, because I think we can do that. I think we've gone past digital transformation. If you're only just doing digital transformation, where were you 10 years ago? I mean, come on, pull your socks up. Today, we should be beyond that, doing it better forever and focusing upon how can we make society and our world a better place. And this is not about community banking or anything like that, but it's about stakeholder capitalism. I think the old days of shareholder capitalism are up the spout. If you're only focused on delivering returns to shareholders, then that's good for them. It ain't good for me. And Gen Z, or Z, or whatever you want to call them, depending on the language, and millennials and me are saying, that's not good enough. I want you to pay attention, in my case, to biodiversity. I don't care about climate change. I don't care whether that's real or not, because there's lots of people who can argue either way. What I care about is that more than 60% of the world's animals have had their habitats destroyed in the last 50 years. That's what I care about. That's why I donate to the World Wildlife Fund and to the orangutan rescue group in Malaysia. It's interesting, there's now a Standard & Poor's ESG exchange. It's called the ESG 300. And they measure every company in the world on a number of factors. And Tesla fell off the list. And we all think, oh, Tesla's environmentally friendly because that's an electric car company. Not if you look at their internal governance, where they're racist and sexist and misogynist. And there's lots of fintechs starting up that are focused on this. My favorite one is, well, I've got a few, but the one I like to reference is Arlandsbanken from Finland, who every time you make a payment, they offset the payment into a fund for rescuing the Baltic Sea environment, so that the Baltic Sea is sustainable and the fish and the habitation and biodiversity there can thrive and be sustained. And they've then sold that to over 100 companies worldwide, and it's used by over 100 million people worldwide through a partnership with Visa. But there's so many. I mean, this is where we can make a difference. Bring banking and finance and technology together to make our world sustainable and a better place for the future, so that my kids have a better future. And specifically, the number of companies I meet, particularly startup companies that have a real sense of purpose, amazes me. You know, what's the purpose of your company? Do you know? Is it clear? Is it a bunch of mission and vision, value statements, and corporate claptrap? Or is it alive? Is it believed? Is it actually something living in the executive team and articulated every single day to you so you feel it? Do you feel it? Anyway, in closing, I've covered the two key areas I wanted to cover, which is the technology world of startups and the challenges that creates for traditional firms and the way in which we're looking at the future. I guess my final thought is, so what? So what? What's the point, Chris? And the point is, what's the price of an extinction? Are we going to be the first civilizations that basically rule ourselves out of a future? Because I want a future for my kids, and they do think I'm Iron Man. Because I am. Thank you.